Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, Penney is seemingly entering the next phase of its turnaround as a company. Its stock hasn't been doing too poorly lately either in the face of all of this market roller coaster ride. We're going to talk more about it with our strategists Tracey Ryniec and Dave Bartosiak, taking the fundamental and technical picture on this company. Tracey, let's start with you. On August the 31st, according to published reports, Penney shares were up 3% in the face of this market roller coaster. They just reported Q2 earnings, I think, as well. But still, for many analysts, the big question is, when are they finally going to post a profit?
Right. Penney, they've been around forever. I didn't even realize this, but they were actually founded in 1902. Ooh. So they're 113 years old now. That's got to be among the oldest of the department store chains, still hanging in there, but barely. As we know, they had a rough go of it during the Great Recession. Mm-hmm. They hired the Apple retail head, 2011, Ron Johnson, right. And that did not work out well. They got rid of the coupons, which everybody does love.
There's a worm in that apple,
you think
Dave?
You don't love it, but we do. We love it. I know. So he was fired in 2013, but the damage was basically already done. Yeah. Same-store sales were crashing. The regular customer was mad. They left. No one knew if they would even come back.
Well, even though he was fired in 2013, they haven't posted profit since the fourth quarter of 2011.
That's right. So they still are in the turnaround mode, but they brought in the old CEO. He stabilized things. And then last November, they announced their new CEO, Marvin Ellison. He was at Home Depot for 12 years. Before that, he was at Target. He understands the market, mm-hmm. and he knows how to run these big chains. He officially took over in August. So for that time, he was basically, shadowing the other CEO. That's right. I like that as a shareholder. I want to know that he's, in on everything. They're not just throwing him into the deep end there. Mm. And then, sales have improved. They've seen 7 of 8 quarters now with same-store sales growth. That's what you need for retail. But as you said, there's no profit yet. Earnings are growing. They're going in the right direction. I put up here the chart. You can see they're still expected to see the loss this year and next year, but a significant increase in earnings per share, both this year and next year. They're growing at like 50% this year, another 60% next year. I'm hoping that 2017 is the year they may see a profit. That's when all of the cost cutting, things that they're doing is supposed to reach fruition. Some analysts don't think it's going to happen. They think it's still, while they've stabilized, they aren't making enough inroads. A lot of the analysts want them to close more stores. They have a little over 1,000 stores. Mm-hmm. They are closing about 40 this year. But interestingly, their more rural locations are their more profitable and they're more successful stores. So they don't really, I think some analysts want, let's just cut all those small stores in the no-name towns. But that's where they have less competition. They are having real success with the Sephora brand that's in their stores now. That's, beauty products. It's a competitor of Ulta. Right. That's a double-digit comps in this last quarter. That's real strong. And they're rolling that out. It's only in about half of their stores right now. They're rolling it out in all of their stores, or at least a significant number, and including in these smaller town stores where they might not even have an Ulta, and they certainly don't have a Sephora. Mm-hmm. So they expect that to, it brings people into the store. They buy at Sephora. They might buy somewhere else. They also are working on their online strategy. That's another area that's not that great. I mean, we find it hard to believe now that companies are still struggling with how to, sell online merchandise. But with Sephora, they only in May launched online buying capabilities on their own website with Sephora. So that's only a couple months of doing that.
But fundamentally, you think they're on solid ground here?
Well, I mean, they've lost over $3 billion, or down the that's gone.
Over the last 14 quarters, published reports have them losing $3.3 billion.
Right.
Yet the stock is up 43% so far this year.
Right. You have to ask Dave what's going on with that.
What's going on
I don't know.
That? What's up with that?
Is it that good?
It doesn't matter. It doesn't matter. There's like a small pulse on the ground. This thing's dead. I'm sorry.
Really?
It's dead. It's dead. So, It's great. Okay, these things are going to do. This stock is going to do very. The stores that are out in the middle of nowhere where you have absolutely no choice but to shop at JCPenney.
right.
So you're going to do with JCPenney, and that's good. No. So what happens in the cities you're getting crushed, in the suburban malls you're getting crushed. Have you been to Golf Mill Mall lately?
No.
This thing like collects dust. Like I'm scared when I walk by a JCPenney because it's spooky because nobody's in there.
Right.
Like,
Interesting.
No JCPenney for me. Anyway, and then if you take a look at the stock chart, which we can pull up really quick here. So it looks good because this thing has kind of risen from being, a no-name thing, because there is a little bit of enthusiasm surrounding, the new brass that's coming in, and hopefully they can turn things around. But then again, Ron Johnson thought he was going to turn it around. He was like, I'm going to turn JCPenney into a Starbucks, and we're all going to hang out here, and it's going to be the hip place where everybody's going to go. So I guess the people out in the rural areas think that it's the hip place to go, but everybody else knows better. I think I went to JCPenney in 5th grade to buy my tie for graduation, and that's the last time I've been inside of there, and probably the last time I'll ever be inside of there. You're going to need to give me some really nice coupons to go inside of there. Kohl's will crush JCPenney all day.
So tell us what you really feel.
Anyway, I know I got fired up about this one, but no, if you look at this stock chart, though, like I was saying, it's right at the top of its range where it's been for a few months now here. It's bounced between $720 and this kind of $940 range. A lot of the volume went out at $850, so it's kind of north of that point of control here. Could this thing break out to the upside? Sure, maybe, but I think you've got a lot of headwinds for this thing in the future. And, Tracey, you'd know this better, but, what are the last 5 awesome turnaround stories in retail?
Well, there's not that many.
Exactly.
Once the brand
So JCPenney, is this going to be the one? We thought Sears was going to be the one, and everybody loves Sears, and everybody. No, sorry, old news. Thanks for playing.
All right. So out of the ashes does not necessarily rise the phoenix, eh?
No.
Okay. I know you.
Unless you want to be JCPenney-less.
Oh boy. Oh no.
Zingers.
Yeah. So I know you don't own the stock, Tracey. Do you?
I don't either.
All right. Thanks for the input, both of you. In the meantime, if you want to check out more stock information of varying sorts, get on over to our website, Zacks.com. If you're not there already watching this video, you can get there just by going on the interweb. Hitting Zacks.com takes you right to the homepage. And if you're watching our video on the YouTube platform, don't forget you can subscribe to them there and comment on them. And you may have some comments for Dave's comments, for example. With Tracey and Dave, I'm Terry Ruffalo.